As the markets are currently closed for the weekend, Big Bear AI Holdings, trading under the ticker BBAI, closed the last session on Friday, October 3, 2025, at a price of $7.19 per share. This represented a slight downturn of about 1.10% for the day on a notably high trading volume of over 87 million shares. Now, the immediate reaction for many watching that price action is to categorize BBAI as just another volatile, high-risk tech play, susceptible to the whims of day traders and market sentiment. The expectation is a story of speculative fervor, a stock fueled by the broad excitement around artificial intelligence. However, the reality is far more complex and grounded in a world far removed from typical tech hype. The deeper truth is that Big Bear AI is not just an AI company. It's a critical contractor for the United States military and intelligence communities. The volatility you see on your screen is the market struggling to price a company that lives at the intersection of speculative technology and clandestine long-term government defense projects. This isn't about creating a new app, it's about deploying advanced analytics and predictive modeling for national security, a factor that many conducting a simple online investment search might completely overlook. The prevailing belief among many retail investors, often those utilizing platforms like the Robinhood app for its ease of access, is that BBAI is a pure play on the AI boom, similar in nature to more commercially focused firms. They see the ticker symbol and associate it with the broader and often frothy AI market. This expectation leads to trading patterns that are heavily influenced by sector-wide news rather than company-specific fundamentals. A positive development for a large-cap AI name like NVIDIA stock can, illogically, send ripples of buying into BBAI. But this view is fundamentally flawed. The reality is that Big Bear AI's fortunes are not directly tied to consumer or enterprise AI adoption in the same way. Instead, its revenue and growth prospects are intrinsically linked to the U.S. federal budget, Department of Defense spending priorities, and the geopolitical climate. Its client list isn't composed of Fortune 500 companies, but of entities like the U.S. Army and various intelligence agencies. Therefore, the savvy investor, perhaps one using a more robust interactive brokers trading platform or managing their portfolio through Fidelity Investments, understands that analyzing this stock requires a completely different lens. You need to pay less attention to Silicon Valley trends and more to developments in Washington, D.C. This disconnect between the market's general perception and the operational reality of the company is the central tension that defines the BBAI stock narrative. Examining the recent stock movement reveals this tension playing out in real time. The past several weeks have been a showcase of extreme volatility. For instance, just looking back to mid-September, the stock surged dramatically, at one point climbing over 60% in a matter of days, fueled by a combination of high short interest and positive sentiment around the defense AI sector. Trading volumes during that period were immense, often exceeding 100 million and even 200 million shares in a single day, dwarfing its average volume. This is not the behavior of a stable, mature company, but one caught in a tug-of-war between long-term holders and short-term speculators. Many who engage in self-investing were likely drawn in by this momentum, hoping to ride the wave. However, the subsequent price action has been just as sharp in the other direction, with significant pullbacks. The closing price of $7.19 on Friday is substantially off its recent highs near $8.50. This kind of price swing isn't just random noise, it's the market reacting to a complex set of inputs. On one hand, you have positive catalysts like the announcement of new government contracts or prototype agreements, which signal fundamental strength. On the other, broader market fears about interest rates or economic slowdowns can disproportionately impact speculative, non-profitable tech companies, and BBAI, despite its serious business, gets lumped into that category. Furthermore, its financial performance has been mixed. While the most recent quarterly earnings in August showed an earnings per share beat, revenue came in below expectations, falling 18% year over year. This miss was attributed to disruptions in certain U.S. Army contracts, highlighting the very real risk of its dependence on government programs. This is the kind of detail that automated platforms like Schwab Intelligent Portfolios or a standard SoFi robo-advisor can't fully appreciate. They see a tech company with weak revenue growth, not a defense contractor navigating the complex and often lumpy realities of federal procurement cycles. An individual investor doing their own diligence via an individual brokerage account must dig into these nuances. So what exactly does Big Bear AI do? At its core, the company provides decision intelligence solutions. It builds AI-powered platforms that allow large, complex organizations to make sense of vast amounts of data to predict future outcomes and make better decisions. Its business is primarily split between two segments: Federal Solutions, which serves the U.S. intelligence community, the Department of Defense, and other government agencies, and Commercial Solutions, which aims to bring similar capabilities to the private sector. The crown jewels of its offerings include platforms for predictive analytics, logistics, supply chain management, and biometric identification. For example, its work with the U.S. Army on the Global Force Information Management System is a multi-year, 9-figure project designed to modernize how the Army manages, staffs, and deploys its forces. This is not a speculative venture, it is a deeply integrated mission-critical system. The company's past is rooted in this government work, having been formed through the combination of several legacy contracting firms. Historically, this has meant its financial results have been inconsistent, marked by periods of heavy investment and losses as it develops these complex systems ahead of major contract payouts. This is a crucial piece of the puzzle for anyone considering an investment in BBAI. The expectation of smooth quarter-over-quarter growth that one might have for an Apple stock, for example, is entirely misplaced here. The reality is a business model based on winning large multi-year contracts that can lead to lumpy and unpredictable revenue streams in the short term. Looking ahead, the future outlook for BBAI is a fascinating study in potential versus peril. The bull case, the scenario where reality could far exceed current expectations, is compelling. The company recently reported its strongest ever balance sheet with a net positive cash position. This financial stability allows it to aggressively pursue new contracts and even potential acquisitions. Furthermore, there is a significant tailwind from increased defense spending, particularly in technology and AI. Geopolitical tensions continue to underscore the need for the advanced intelligence and predictive capabilities that BBAI specializes in. One single major new contract win, on the scale of the GIFM project or larger, could fundamentally alter the company's financial trajectory and force a major re-rating of the stock by Wall Street. Investors who use SoFi Invest or other modern platforms have to weigh this potential against the very significant risks. The bear case is equally potent. The company remains deeply unprofitable, posting a staggering net loss of over $200 million in a recent quarter, partly due to non-cash charges, but still indicative of a business that is burning through resources. Its reliance on the U.S. government makes it vulnerable to budget cuts, political shifts, and the notoriously slow and bureaucratic procurement process. Competition is also fierce, not just from traditional defense giants, but also from other specialized tech firms like Palantir, which is a much larger and more established player in the government data analytics space. Analysts' price targets reflect this uncertainty, with forecasts ranging from as low as $1.50 to over $8. This wide dispersion tells you that even the experts are struggling to model the future of a company with such a unique risk-reward profile. The expectation is for continued volatility, but the reality of where the stock will be in a year depends almost entirely on its ability to execute on its backlog and win the next big contract. Before we go further, I want you to comment below. Do you believe the U.S. defense budget for AI and technology will increase or decrease over the next 5 years? Let me know your thoughts. In conclusion, the story of Big Bear AI is a stark reminder that the stock market is not always a rational place. The popular expectation paints BBAI as a speculative AI meme stock, a pawn in the game of retail momentum traders on platforms like Robinhood. Its daily price chart, with its wild swings and massive volume spikes, certainly supports that narrative. However, the underlying reality is that of a serious, strategically important company deeply embedded in the U.S. national security apparatus. It's a company whose success hinges not on viral trends, but on the arcane world of government contracting and the long-term strategic priorities of the Pentagon. The disconnect between these two narratives is what creates both the immense opportunity and the significant risk associated with the stock. For those who can look past the noise, who can analyze the company through the proper lens of a defense contractor rather than a typical tech startup, and who have the risk tolerance for the inherent volatility, BBAI presents a unique case. The challenge for investors, whether they are using Fidelity ETFs, trading on interactive brokers, or managing their own portfolio via SoFi, is to separate the speculative frenzy from the fundamental drivers. The reality is that Big Bear AI's future will be written not in social media posts, but in the pages of multi-million-dollar government contracts that are, by their very nature, anything but predictable.